The office market for the west side of Los Angeles has been a pretty tight market of late, especially due to the influx of the people from the Silicon Beach tech companies. We've seen a sharp decrease in overall vacancy rates. I don't see that changing for the second quarter. I think it's going to remain relatively stable for the office market itself, with rents rising slightly over into the next quarter. So I'm forecasting a slight increase in the office rents for the second quarter of 2016 primarily for the West Los Angeles submarket. This is due to increased demand with reduced supply. So we expect to see a pretty good increase overall. So the demand for creative office space in the West Los Angeles market remains very strong with very low inventory. So because of that, we're seeing a huge increase in prices, especially along the Abbot Kinney, the whole Silicon Beach area of Abbot Kinney and Santa Monica and Playa Vista, with some rents really outpacing what the current market rents are for typical normal office space. The retail market is a little bit different than the office market in that we are actually starting to see a little bit of a softening with a little bit more spaces coming available, vacancy rates going up a little bit higher, and what we have not really seen lately is a reduction in rents, which I do forecast happening probably more along the third quarter of this year as opposed to the second quarter. But we are seeing some other indicators with, even as an investment side, lenders are being a little bit more conservative for certain types of retail, such as big box, so debt placement's getting a little bit harder to find. The multifamily asset class for commercial real estate has always been a very popular class for investments, and it still remains a very strong class of investment with a high demand. We're seeing a pretty good compression in cap rates over this last year, and in some of the neighborhoods as low as or below a 3 cap for certain parts of Santa Monica and Venice. So, as far as how I see it as an investment, the demand for rental housing is going to remain strong, especially in these neighborhoods. However, I do think that investors need to weigh what they're looking at when it comes to the financing of these type of properties, as well as what's on the horizon when it comes to rent control and increased expenses such as water rates going up. So there's been a lot of talk about the new Metro line coming into Santa Monica, and I myself am very excited that it is coming and opening soon, and will be using it myself. How it will affect commercial real estate, though, in general, I don't see much of a change, especially along the line itself. Where I do see it affecting it the most is probably at the terminus over in Santa Monica, and primarily for the food establishments and or anything geared more toward the tourists itself. I don't see much of a shopping. I don't expect that the users of the rail system are going to necessarily go use it to go shopping in Santa Monica. More of a destination to enjoy the day, and that's where I see on the retail side, I see the establishments really picking up are going to be primarily the food and or tourist related establishments.